Well, I think that fundamentally it's good news because it removes a huge wave of uncertainty from the housing market, particularly the top end of the market, who have been sitting on their hands for the last 9 months since the budget in March. The government have lived up to their promise of trying to stop SDLT avoidance that they've perceived as going on without affecting the rest of the wider market, and with that they've been successful.
There have been three main changes. We have a brand new tax, and that will be various fixed rates. The government will also introduce new capital gains rules to apply from 1st of April 2013. Currently, non-resident companies don't normally pay capital gains tax when they sell UK properties. From April 2013, they will have to pay it. And the third significant change is that the government have accepted they need to introduce new reliefs to the top rate of SDLT. The government only want to hit owner-occupiers, so they will be introducing various reliefs to bring that rate down to 7%. So overall, it's kind of good news in that sense that we have a bit of certainty about what's coming in now.
The good news is our clients will be better off. However, though, it's not as straightforward as it looks. There are going to be traps for the unwary. So the advice is come to us, get advice, and see what this actually means for your clients.
When it comes to working out what to do with your existing structures, the devil is very much in the detail. There are so many factors that you need to consider, and there is basically no one-size-fits-all solution for your structures at the moment. The kind of things you need to look at are the value of the property. Is it rented out? Is there a mortgage? When's it going to be sold in the future? Is it a long way off, or is it in a couple of years? Will it be a big profit when it is sold? What's their resident status? What's their domicile status? Will any of the exemptions that Jonathan talked about apply? Because all of those factors are the kind of things you need to work out. Balance up in deciding whether to keep your structure or to dismantle it.
What I think has changed following yesterday's announcements is that the balance is now shifting towards keeping your structure rather than dismantling it.
A word of caution for anybody who deals outside the gated community of the M25. Both sporting estates, country houses, the top end of the market is in a very, very poor state at present. The same things that we see operate in central London do not appear to apply when it comes to properties outside London, and 2013, for those involved in buying and selling properties, are going to find it incredibly tough.
Considerable amount of balancing exercise that needs to be done, factoring in the inheritance tax issues on the one hand, capital gains tax issues on the other, and the income tax issues that also applies. So it's reviewing the structures is the key thing. It may mean that they don't have to change their structures, but it's a step that they need to take now so that the position they adopt is a considered one.
It is all about countering stamp duty land tax avoidance. What the government doesn't like is the real or perceived activity of people selling shares in companies, special purpose vehicles, usually offshore vehicles which own properties, and therefore paying zero stamp duty land tax, zero stamp duty. That is what they want to stop. The key dates are 1st of April 2013 for the new annual charge. This is the annual residential property tax. If you're a company or another non-natural person who owns a dwelling worth over £2 million, you will be within the scope of that tax from April 2013. For the capital gains tax rules, it's the same date, 1st of April 2013. Any disposals by non-resident companies after that date will be hit by the new rules. In terms of the stamp duty changes and the additional reliefs which have been introduced, that is a little bit more vague. We've been told by the government that those rules are going to come in when the finance bill gets royal assent. We don't quite know when that will be. It's in July, possibly August. So in July 2013, possibly August 2013, the stamp duty changes will come in. So those are the dates.